As a realtor, you need to be the expert when it comes to financing in your market. Here are the 3 points that you need to show your expertise to your borrower, your buyer, so you can win their confidence. Number one, here are the changes at FHA. The mortgage credit reject process. It was required anytime a FHA loan is denied due to the borrower's qualifying or even the property's denial. That had to be recorded on that case number and it stuck to the property. That is no longer a required process. That has been eliminated. What this means to you is someone that's been turned down or a property that's been turned down previously after September 11th, it's already in play. That is no longer a requirement to include that on the case number to file that. Previously, the way it would work is that any mortgage credit reject that was on the file would require an automatic audit after an approval was issued. So it puts that underwriter in a hot seat to show that the property, something has changed and the liability kind of falls on them. So that process has been streamlined. It makes the process quicker. It doesn't have a prejudice to the buyer or the property moving forward. So we think that's a positive development. Another change at FHA may come down the pike. This is what's going on. There's a conversation. Ted Tozer, the previous president of Ginnie Mae, has brought up the possibility of competing with VA and USDA loans where the down payment would be either lowered or possibly even eliminated. So that is a serious conversation. It's just starting. It would take an act of Congress. So don't run out and tell people this. Something that's being very seriously considered, and it may come on the next legislative round of bills as a possibility to make home ownership more affordable to borrowers that struggle with that down payment. It's not a guarantee, but the conversation is real and it's happening. Just keep that in the back of your mind. FHA is starting to loosen up. That's a positive development for first-time home buyers. Number two, the conforming loan limits. The way that's figured every year, the 2024 loan limits will be issued sometime in December by FHFA. How it works is they compare the third quarter, in other words, 2022, to the third quarter 2023, the price increase that took over those two quarters specifically. If you look at the math on that, right now we have the third quarter behind us, and we're looking at about 3.3% appreciation across the country. So that's the process in figuring out what that core conforming loan limit is going to be. If you do the math on that very quickly, you're seeing somewhat just north of $750,000 will be the new conforming loan limit. However, that won't be released, like I say, until December, but know that it's not going down. So much talk of values dropping, that type of thing. It's just not the case. And so it encourage your buyers. You need to understand that there is a price appreciation, not as much as we saw in last several years. However, it is going up, and the conforming loan limit will go up with it somewhere in the neighborhood of $750,000. So good news is coming. The third point, why are interest rates high and why are they remaining high? Right now, as I speak, rates are roughly 7.5% for conventional loans with, standard credit, down payment, that type of thing. That's just a range. Why are they high? The Fed had to raise interest rate, overnight funds rate, the Fed funds rate, to slow inflation. Inflation has slowed down drastically. We were up and around the 9%. Some people think it was much, much higher. And now we're in the mid threes. And so why are rates staying high if inflation's under control? Well, we have a couple of dynamics in play. Even though inflation has definitely come down, we do have a situation where oil is still high. We went from $65 a barrel to over $90 a barrel, and that is pushing inflation along. It can make it stickier. So the Fed is not going to be coming down on interest rates. They're not going to lower interest rates until we make sure that the inflation has been put to bed and it won't raise its ugly head with the price of oil. That's one thing. The other thing is the deficit. We are borrowing a tremendous amount of money right now as a country, with a deficit over $256 billion over the last couple of months in deficit spending. Next week alone, there is $101 billion of U.S. debt that needs to be auctioned. And what happens is that volume hits, those loans, if you will, have to be sold into the marketplace. In other words, pension funds and institutional investors, insurance companies, they're the buyers of this debt. Well, we go into the same marketplace as holders of mortgages. And so IBM pension fund needs to invest pension money. They have to go with high quality investments, of which U.S. Treasuries or U.S. debt is one of those classifications that fits that credit standard. However, mortgages compete with that as well as a Fannie Mae, Freddie Mac conventional conforms to guidelines. So it's a debt that's saleable and can be purchased by pension funds, for example. example. So we have to raise interest rates to attract that money back as more volume hits the marketplace as far as treasuries. In other words, we compete with that as far as interest rates. We have fundings we have to close, purchases are in escrow, and we need to sell that debt. And so it's a bidding process. And so they're sold as bonds. And so it's a bond market, just like stocks. And so it's a supply and demand. So there's a tremendous amount of supply. And so it lowers the price of the bonds, it raises yields, it raises interest rates. That's why interest rates are staying high. Even if they begin to lower the Fed funds rate, which you'll hear in the coming months, we're going to see inflation kind of sticky because of the situation with oil. But we also have a situation where we're competing for that debt and treasuries as the government needs to be funded. And the near shutdown that we experienced here last week, that's causing a lot of volatility in the market as well. So you have to know when to lock loans right now, because that volatility, even intraday, rates are going up and down. I do hope this information helps you out. Be sure to subscribe to our channel and ring that notification bell so you won't miss an update. We'll be sending these out once a week to realtors. It's blessing them, it's helping them make decisions and communicate to their borrowers what's going on as far as financing, which is a big piece of your transaction. And you have a wonderful week.